Good morning, class. So today now we are going to discuss the question of accounting equation, and this question I have taken from T.S. Grewal. Okay, so now you can see here we have a question having 7 different transactions. So first, today we are going to solve this question in very easy way. So before the solving of questions, let's discuss about the transactions, what exactly they want to say and what is the effect of this transaction in the various accounting equation. So first we have started our business with cash, with check, that is of bank, goods, that is stock, or the machinery and the furnitures. And you know, whatever things we use to invest in business to start it is called capital. So simply on the basis of first transactions, we can say the total amount of capital, that is of 3,60,000. Then in the second transaction, we have sold 1/3 goods, okay, at a profit of 10%, and the value of goods that is given in the first transaction 60,000, and here we have sold 20% of that, sorry, 10%, 1/3 of that, that is of 20,000 rupees, that we have sold it at profit of 10%, and 10% of 20,000 will be 2,000. So net sale, that is of 22,000, and out of that 22,000 we have received 50% of it, and 50% of 22,000 will be 11,000. 11,000, that is the amount which we are receiving in cash, and rest of 11,000, that is of credit transactions. So next we can continue with depreciation. Depreciation on machinery provided at the rate of 10%, and the cost of machinery, that is of 1 lakh. So that's why total depreciation will be 10,000, just because of 10% of 1 lakh is 10,000. The next we have cash withdrawn for personal use, that is drawing, and drawing always decreases our cash and capital both. And next we have interest on drawing charge. So interest on drawings are basically charged by the companies, so that's why we can say interest on drawing, that is a kind of income for the business organization. So that's why we have to add that interest on drawing in the capital, because it's non-cash item, okay. And but this amount will increase the amount of drawings also. So one side it was a part of income, that's why we have added it, but another part of that transaction, it's a kind of expense, so again we have to subtract it. So once we have to add, and next we have to decrease or less this amount. Goods sold to Gupta for 10,000 and receive a bill. So we have to decrease our stock, but at the same time we have to increase our bills receivables, okay. In the last transactions, we are going to recover the amount of bills, so it will increase your cash and it will decrease your bills receivables, okay. So here let's discuss first question. So on the basis of first question, we can say our cash, our bank, our stock, machinery and furniture, these all these items will appear in the business, will enter in the business, or it will increase in the business, and all these items belongs to the asset side, okay. And next item is going to affected, that is of capital, and capital is the part of capital only, okay. So next second transaction was there, which we have to discuss, that is very important thing. So in that transactions, in the second transaction, we have purchased goods, we have sold goods, 1/3 goods of the above. It means whatever we have goods in first transaction, that the goods, 1/3 of that goods we have sold here. So first we have to find out the cost of goods sold, total goods costing, that is given 60,000, and we have sold just 1/3 of that, and 1/3 of 60,000, that is of 20,000, and we have sold it at a profit of 10%, and 10% of cost 20,000, that is of 2,000. So total sale will be 22,000, and out of 22,000 we have to find out what is the amount of cash sale and credit sale, because cash sale will increase the amount of cash and credit sale will increase the amount of debtors, okay. So here different effects are there, because just because of the cash transaction our cash will increase, because of credit transaction our debtors will increase, okay. Cost will decrease by 20,000, and we are getting profit worth rupees 2,000, and you know all the profits and incomes used to increase our capital. Okay, so on the basis of all the transactions, all the 7 transactions, we have to check the effect. Okay, what is the effect of all these transactions? So in the first transactions, things are going to affect it: cash, bank, stock, machinery, furniture and capital. Okay, and in the second transactions, cash is going to increase, stock is going to decrease, debtors are going to increase and capital will increase just because of the profit. In the third transaction, depreciation is there, so that's why the amount of machinery and capital both will decrease by the same figure. And in the next transaction, cash withdrawn for the personal use, it will decrease our cash and capital, because drawing, that is a kind of expense, and expenses decreases our cash and capital both. Next we have interest on drawing charge 5%, so that interest on drawing will increase our capital once, and secondary it will decrease our capital. Because of income we have to add it, and because of expenses we have to subtract. And goods sold to Gupta for 10,000 and receive a bill, so it will decrease our stock by the same figure and it will increase our bills receivable. They have not mentioned what is the cost and at what rate of the profit they have sold, so we have considered it selling price and cost price was same, so that's why in this transaction we don't have any profit or loss. And last transactions, we have received the amount of bills receivable, so that's why cash will increase and the amount of bills receivable will decrease, and both are the part of asset side. So on the basis of all the questions, first we have to see the questions, read the questions, and on the basis of question we have to find out which items are going to affected. Okay, so we have to make a list of all the assets and all the liabilities whichever is going to affected in this question. So here first, on the basis of all the transaction, मैंने पहले ही सारे items को लिख लिया है. As you know, the first and the very important equation, that is assets is equal to capital plus liabilities, or you can say assets is equal to liabilities plus capital. So first what I did, so first I have note down the name of all the assets and all the liabilities. So on the basis of different questions in this, on the basis of different transactions in the questions, we have to affect our cash, bank, stock, machine, furniture, debtors and bills receivable, as well as capital. So this time I am not going to mention you the transactions, I will write here transaction number 1. So that's why you have to note down somewhere else all the transactions. Okay, so it will help you to understand it. So in the first transactions, we have started our business by investing cash rupees 50,000, by check 1 lakh rupees, goods worth rupees 60,000, machinery worth rupees 1 lakh and furniture worth rupees 50,000. And as we have already discussed that when we start our business or the things invest in the business, that is considered as capital. So here we can see cash 50, bank 1 lakh, stock is going to increase by 60,000, machinery 1 lakh and furniture 50,000, and the sum of assets side, that is of 3,60,000, that is our total investment, so it will be equal to our capital. So this is our first transactions. Next, second transactions. In the second transactions we have seen, that was very important transactions, we have seen we have sold 1/3 of the available goods. So you can see in the first transaction we have goods worth rupees 60,000 and we have sold 1/3 of it. 1/3 of that goods will be 20,000, and that goods we have sold at a profit of 10%, and 10% of 20,000, that is of 2,000, that is your profit, and this profit will increase your capital. Okay, so capital will increase by 2,000, so total sales amount will be 22,000. Out of 22,000 we have received 50% of it in cash, and rest of 50,000, that is credit transaction. So just because of cash transaction, our cash will increase by 11,000 and our debtors will increase by 11,000. So now here we can see our new equation, that is 50 plus 11 is equal to 61, that is amount of cash. There was no change in bank, so it will remain 1 lakh, and stock has been decreased by 20,000, so revised stock will be 40,000. Machinery, there is no change, so it will be 1 lakh rupees. Furniture, again there is no change, so it will be 50,000. Debtors, it was previously 0, but right now in the second transactions they will appear by 11,000, and we don't have bills receivable till now, okay, in the second transactions. And in the at the capital side, we have increased our profit, we have increased our capital just because of profit, both rupees 2,000. So revised capital will be 3,62,000. Okay, so it was transaction number 1, transaction number 2. After these two transactions, we have written our new equations. Let's discuss about the transaction number 3 and their equation. So here, first, in transaction number 3, we have charge depreciation over the machinery, and depreciation, that is a kind of non-cash expense. Non-cash expense, it means this transaction is not going to affect our expense, but it will decrease the amount of our assets, that is of machinery. So machinery will decrease by 10,000. At the same time, all the expenses decreases our capital. So for this transaction, we have to decrease our capital by 10,000. So after third transactions, we have to check our new equation. So amount of cash is not going to change, so it will be remain 61,000. Bank not change, so 1 lakh rupees. Stock no change, that's why 40,000 rupees. Machinery will decrease by 10,000 because of depreciation. Revised value of machinery will be 90,000. Furniture no change, so that's why 50,000. Debtors no change, 11,000. And bills receivables अभी तक नहीं है, appear नहीं है. And capital, it will decrease by 10,000, so revised capital will be 3,52,000. So after these three transactions, we have this equation. Let's discuss our fourth transaction with new equation. So in this transaction, we have withdrawn 10,000 for our personal use. So personal use, that is drawing, and drawing decreases the amount of cash as well as the capital, because drawing is also a kind of expense. So our cash will decrease by 10,000 as well as our capital will decrease by 10,000. So after the fourth transaction, we have new equation. Our cash will decrease by 10, so revised cash will be 51,000. Bank 1 lakh, stock 40,000, machinery 90,000, furniture 50,000, debtors 11,000, and revised capital will be 3,42,000. Then after we have transaction number 5 with equation. In the transaction number 5, we have to charge 5% interest over the drawing, and drawing, it was in the fourth transaction, worth rupees 10,000. So 5% of 10,000 will be 500 rupees. So basically all the companies receive interest over the drawing. So that is a kind of income, that's why we have included it in the capital. And at the same time, we are actually not going to receive that interest on drawing. Okay, so interest on drawing will increase the amount of drawing, so that's why it's again it will be part of expense, so that's why we have decreases that 5,000. So after fifth transaction, our revised equation: cash 51,000, bank again 1 lakh, stock 40,000, machinery 90,000, furniture 50,000, debtors 11,000, and capital will be 3,42,000. So here we can check the sum of new equation after fifth transaction: 51,000 plus 1 lakh plus 40,000 plus 90,000 plus 50,000 plus 11,000. The sum of asset side is equal to 3,42,000. So at the mid, sometime after doing 2 or 3 transactions, we have to cross check. Okay, let's discuss transaction number 6. In the transaction number 6, we have sold goods worth rupees 10,000 to Mr. Gupta, and at the same time we have received a bill. Okay, so we are getting bill, that's why we will increase one more item by the name of bills receivable. Okay, we don't have to include this amount in the debtors just because of the credit transactions. Okay, so because debtors and bills receivables both are the part of trade receivables. Okay, so here our stock will decrease by 10,000 because of sales, credit sales, and at the same times we have to increase our bills receivable. We don't have to increase our debtors. Okay, and there is no effect on capital, as why that we have already discussed at the very beginning. So after the sixth transaction, our new equation: cash 51,000, bank 1 lakh, and stock will decrease by 10,000, so revised stock will be 30,000, machinery 90,000, furniture 50,000, debtors 11,000, and bills receivables we have to write 10,000, and there is no effect on the capital side. So after this transaction, after transaction number 6, we have transaction number 7, that is very important transactions. In transaction number 7, we have received the amount of bills receivable. It was 10,000. So once when you will receive the amount of bills receivable, it will decrease the amount of bills receivable by 10,000, but it will increase the amount of cash worth rupees 10,000. So after the transaction number 7, we can check that effect. So revised cash will be 61,000 because previously it was 51,000. So after adding 10, it will be 61,000. Bank will be 1 lakh rupees because during all the transactions there was no changes in the bank. And stock, revised stock will be 30,000 as usual. Machinery will be 90,000. Furniture will be 50,000 and debtors will be 11,000. So after this last transaction, our new equations, the total of asset side we can cross check and we can match with the total of capital plus liability side. So in this transaction there was no item related to the liabilities, that's why we have not written anything there. Okay, so once when you will complete the questions, at the last we have to find out the sum because we need to prove that business or the accounting equation, that is of assets is equal to capital plus liabilities. Okay, so here the sum of asset side like cash 61,000, bank 1 lakh, stock 30,000, machinery 90,000, furniture 50,000, debtors 11,000 and the bills receivable amount is 0. The sum of asset side, that is of 3,42,000, as you can check, and the total of capital plus liabilities are 0, so I have not mentioned here, but asset is equal to capital plus liabilities, that is 342 our assets amount, and capital plus liabilities are also 3,42,000. So here we can prove our transaction, that's why at the transaction side we can use to write total. Okay, before that we have to write new equation. So it was question number 15 or 16 from T.S. Grewal. So that you can check. If you have any doubt, that we can discuss. Okay.